So let's talk a little bit about quantum computing, because I think quantum computing stocks, they're going to be the next big thing. They're going to be the next AI, right? So we had the AI stocks that had the big run up here in the last 3 years or so. I think very soon we're going to get into quantum computing being the next big thing, kind of in conjunction with AI. We're already starting to see that with some of these AI quantum computing stocks like IonQ and Rigetti Computing and D-Wave. They're making really big gains here in recent weeks. And because of the gigantic run-up that some of these quantum stocks have seen, implied volatility is jacked in these things. If you want to go sell some naked options in products like IonQ or Rigetti, you're going to receive some extremely juicy premiums for selling those short options. Of course, there's risk associated with it, but of course, for taking risk, you get paid, right? To make reward, you have to take risk. And for me, I'm comfortable taking this kind of risk in these kinds of stocks because I think long term, these stocks are going to work out. I don't mind playing these with naked short options, especially naked short puts, because I don't mind necessarily holding shares as a speculative play. Now, I wouldn't go load up on shares of any of these stocks because they're a risky play, but I think taking a small amount of money, a little bit of your capital and putting it into work in these things is something worth thinking about. But let me switch over to my trading platform. If you're new to this quantum computing space, some of the tickers that a lot of people trade, one of the more popular ones is IonQ, which is ticker symbol IONQ. And if I move my head out of the way, and I'm going to have to move my head out of the way for all of these stocks because they've all seen just big run-ups here in the last couple of weeks especially, but really over the last year once quantum computing became the new latest buzzword. This is IonQ. Really good options premium. Right now, IV rank of 58. You can see IVX, 120%. Just insane. Right now, I have a position on in IonQ. I sold some naked short puts in IonQ, and should this thing fall, I'll take a couple of hundred shares potentially of this. But the way this stock has been acting, I don't have high hopes for getting assigned shares. I think this thing likely will continue up. Rigetti is another one that I've been trading a little bit. RGTI is Rigetti. And this thing, wow, the last couple of weeks in this have been crazy. Right now, I have a position on it. I've got a covered strangle that expires in about a week. I just put this thing on actually this morning. I will discuss this trade in greater detail in just a second. Another stock that is quantum computing, QBTS. Qubits, which is D-Wave Quantum is the company. And this thing has an IVX of 137%. Just crazy implied volatility in these things. You can see if I wanted to go trade something in QBTS, which I don't have a trade on, I could go to the 44-day cycle. I could go sell the 10 delta put for $1 on a buying power reduction of only $220. That is just insane to be that far out of the money to get that kind of premium on a buying power reduction of nothing. And it's only a $35 stock. Like, would I mind getting assigned at $22 a share potentially? Well, really $21 a share because I'm getting $1 premium for selling that put. This is, I think it's a smart trade, but a better way to trade this might be to just buy shares now, because this thing, again, all these stocks have been running up. And do you really want to miss out on the run up? I know it's FOMO, right? Fear of missing out. But again, for these, I don't mind playing these small. I don't hate the idea of going and buying 100 shares. I can click on the ask price here in TASTYTRADE and buy 100 shares at $35 a share. And then what I could also do, still sell that 22 strike put, the 10 delta put for $1. I get an extra $1 premium, right, to offset the cost of the shares that I'm buying at $35 a share. So now I'm really only paying $34 a share. But if I should get assigned on this, I have to buy an extra 100 shares now at the steep discount of $22 a share. So I average down. Now I have 200 shares potentially at somewhere around $27 a share or so. So I don't mind playing this again because it's a low price stock. We're not dealing with a large sum of money here. And then I would also sell a call. The highest call I can sell is a 28 delta call for about $2.60. I would sell that because I want that 260 credit. And if I get assigned on the call, will I give up the shares that I bought at $35 at $55? That's a $2,000 profit on the shares plus the $3 or so premium on both the short call and the short put I sold, I'd make $2,300 on this trade if this thing worked out. And that's at 44 days. Now, for something like this, I might actually do something even quicker, and that's what I did in Rigetti. What I did in Rigetti, go back, is I did basically a weekly trade. So, put on something, say Friday for next Friday, although today is Wednesday as I'm recording. I put this on for next Friday, 9 days from now. I bought 100 shares at current market value, and then I went out to the 15 delta mark, sold this 34 strike put for a little more than $1, and then I sold a call at 19 deltas for a little more than $1. Received $2 credit. So as long as we trade in a rather wide range, right, in the next week, as far as on the strangle is probably going to win at least 80 to 85% of the time. I'm going to be fine. I keep that $2 plus I get my shares. Now my shares could be all over the place in price, but I get $2 to help offset whatever happens with the shares. And then I could just do that the next week, sell another covered strangle, and just do cover strangles every week until finally I get assigned on the call side where I'd make about $1,500 plus all the premiums I collect along the way. I could actually make a very big profit if I eventually get assigned on the call side. If I get assigned on the put side, then I've got to average down and buy another 100 shares. In this case, the shares I bought at $44, I'd have to buy another 100 shares at $34. Now I'd have 200 shares at an average price of $39, but all the premium I collected, I received $2. I would average down to about $37 for 200 shares. And then I'd sell another weekly covered strangle, or if I don't want any more shares, I could just do covered calls every week at that point. So this is a way I'm going to play these because I think these things, they have a lot more room to run. I know we've seen some meme-like nature to this as far as this skyrocket move here, but I expect this to stop for a little while, and sit around for a little while, but long term, 6 months from now, a year from now, 2 years from now, it would not shock me if IonQ, Rigetti, and QBTS weren't all trading well above $100 a share. Wouldn't shock me if they were pushing $200 a share a year and a half down the road. Now, of course, none of this is financial advice. This is just what I'm doing with my account, and it may or may not work out. Again, I'm spending money that I can afford to lose on these plays. This is not a serious chunk of my total NetLick account value, and I would recommend you do not put a serious percentage of your NetLick account value in a play like this. But yeah, I think the risk is worth it as far as potential reward, because these plays are good plays because the major tech companies like IBM and Google and Microsoft, they're all heavily investing right now in quantum computing research. So some of these companies, and not all of these companies are the same, Rigetti and IonQ are both pure quantum plays, right? They're focused solely on quantum computing. Now, QBTS is slightly different because this company is a quantum computing cloud-based provider. So they're doing a little something. This is D-Wave, ticker symbol QBTS. But of course, quantum-based cloud hosting is going to be a big thing in the future as well. But that's where I'm putting a little bit of my money to work here right now. I've got positions on in Rigetti and IonQ. I'm not playing QBTS at the moment. Now, of course, you do have to worry, when you have these big run-ups, eventually you're going to get that talk of a bubble, right? Kind of like AI. When AI really started to move in early 2023 was when they really started pushing up. Companies like NVIDIA and AMD and Meta, just started taking off. Microsoft, they all went straight to the moon, and everybody's talking about, well, the market is in a bubble, and eventually the bubble is going to burst. And that was the early part of 2023, right? And we are about to be in 2026 here in a couple of months. So, like 3 years later, is there a bubble? Well, I guess there wasn't a bubble, but you never know. Could this quantum computing thing be a bubble? When all these stocks, which they are right now, are starting to make crazy parabolic moves to the upside, could it be a bubble, and could that bubble burst? Absolutely. So again, trade responsibly. And again, this is not financial advice. You make your own decisions and you live with the consequences. All right, guys. Peace.